Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for February 29th, 2024. Well, we're winding this month down today, and my goodness, do we have some data today that could make it a little bit on the volatile side. No one knows. We're going to find out here in a little bit how the market's going to react. So, let's take a look at what happened overnight. First off, we had Asian markets ended up closing mixed, with Australia just a little bit higher yesterday, and Shanghai surged back up above that real psychological 3,000 level in Shanghai, so up 1.94%, while the rest of Asian markets were a bit lower. If we take a look at Europe this morning, Europe's putting on a pretty brave face here this morning with the DAX up 81 points. Everything else is very modest in gains, but green across the board as they wait cautiously for the U.S. data. We'll be keeping an eye on that. And then, of course, Europe is also going to be putting out some data this morning as well. And then if we take a look at U.S. futures are down across the board, and looking a little bit to the bearish side here this morning as we wait for that inflation data. Of course, anything is possible by the time the market opens. If we take a look at oil this morning, oil was a little bit higher yesterday, but we ended up at the end of the day turning just down a tiny little bit on crude build, inventory build here in the United States. But everyone is keeping a pretty close eye on OPEC because there is a chance they could be cutting production rates. If we take a look, we've got oil up 25 cents this morning at 78.28 a barrel, and Brent is up 30 cents at 83.38 a barrel. And then we have natural gas coming in just a little tiny bit higher, maybe half a cent higher here this morning, at the moment anyway. Then if we take a look at our bond prices, well, our bonds inching higher here this morning. Now, the 2-year bond is staying below the high of this week right now. It's at 4.68%. We've got the 10-year, however, creeping up to 4.30%, and the 30-year creeping up as well at 4.43%. So we'll want to keep an eye on those. The numbers that we have today certainly could have an impact on those bonds this morning. So what does all that mean for today? Well, how about we settle in, buckle up, and let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts and see if we can gain a little bit of information about how we might want to approach the market for today. Remember, what you want to do is you want to shake off that bias in the market and just take a real close look at the market. What happens if we're bullish? What happens if we turn out to be bearish? And then helps you plan your day, how you're going to react coming into this morning's open. So first off, let's take a look at our diamonds chart. Boy, I got to tell you, this is a very bullish looking pattern here. Diamonds breaking through resistance, nice little resting back to support and trend, showing some bulls pushing up here yesterday. They weren't quite able to come up and recover that entire gap and hold it into the close of yesterday. But if the bulls can find that inspiration this morning, there certainly is a reason that we could start moving up and testing some of these levels up in here, and maybe even pushing up toward all-time highs in that diamonds chart. If, however, the bears were to come up with inspiration, you can see we're kind of at a critical point, sitting here on support and trend. If the bears were to be engaged today, well, I would look for that to potentially break. And as you can see, there's not a whole lot of places in here that we might stop. We could stop kind of somewhere there in the middle As you can see, there's some price action right in there that we could stop on. But I think there is a pretty good chance if the data today is not favorable for the market, then we could push in a very big point move all the way down into this area of the chart where we get a little bit better, stronger support. So be prepared for those possible big point moves if those bears engage. I think there would be a lot of folks probably hurrying to close out positions all at once to protect capital. If we take a look at our SPY, also in a very, very bullish pattern. Once again, popping through resistance, slowly drifting back down here toward trend. It's normally exactly the pattern that I'm looking for to be bullish to get long. But with the circumstances of this data, it may change things here. But if those bulls find inspiration, there's certainly every reason that we could push right up off of here. We might test a little resistance in there, see if we can pump through there, and then if we can, I think all-time highs are certainly possible in the SPY. If those bears find inspiration, well, we do have a little bit of extra move that we can move down to find support and trend here in that chart. So that gives us that little bit of extra cushion there. If the SPY were to push back, breaking down through there, however, it might get a little bit sketchy, and we could run into some pretty big point moves in the market. You can see there's a little bit of level right in there that we could grab onto. There's a little bit of a level right in here that we could grab onto. Those are some really big point moves in the market. We shouldn't rule out the possibility of that if our data today is bearish, so watch that carefully. QQQ, also bullish pattern, but maybe just a little bit more on the sketchy side, because you can see we drifted back down below this area of price support. Not so much that it would, really constitute a major break, because if we had good data today, we could pop right through that, and I would be watching for this level right in here to see if that data is good today. If we break right through and then start moving back up to test some of these areas of the chart, and then of course all-time highs. So watch that carefully if those bulls have reason to engage today. Unfortunately, if those bears have reason to engage, you can see we've already broken this longer upside trend, kind of slid past it, and we have that chance that we could establish a new upside trend here. But if that were to fail, if that misses and the bears engage, I'm looking for an area down here in a test. We could move pretty quickly down into that area, and if that area fails, maybe down into here to test a little bit of support in the QQQ. So once again, be prepared if the bears engage. A bit of a painful sell-off possible. Some big point moves could be in play. IWM struggled yesterday. We popped up here and we tried to test that resistance that we've been talking about. IWM's way behind the rest of the market because there's none of the tech giants in it, and we pushed back up there to kind of take a look at that resistance, and well, ended up backing away from it a bit. This morning you can see IWM is trying to pop up just a little bit here in the pre-market. So if those bulls find inspiration today, then I would look for that test back up in here first, and if it breaks through there on a really good numbers today, then push right on up and we'll test this major resistance. This is a really big resistance level in IWM. And then if the bears were to find inspiration here on IWM today, I would look for a test of this support and trend. And you can see we could move pretty quickly through that area. And if we did, I'm looking probably a little bit of price support area right in there that we might catch. That would be breaking the trend, and of course breaking down through that area, I'm going to suggest we come all the way down into here. So again, big point moves possible if those bears were to really engage. If we take a look at our VIX, interesting yesterday as we were rallying back up at the end of the day, we also saw the VIX rallying up. And then if you notice, just immediately after the market closed last night, the cash market closed, futures fell about 130 points. So I don't know what we can expect here this morning, but even the institutions are maybe hedging themselves heading into this morning. So we had that fear all of a sudden coming up here at the end of the day. May not mean anything. Remember, it's going to be all based on these data points this morning. But you will want to notice that these are a little bit higher lows, and if all of a sudden we get some bearish data, watch carefully for that spike up here, and that's where real selling can really begin on those off of those higher lows. So watch that close. And then let's take a look at our T2122. Our T2122 indicator, well, pulled back a little bit yesterday. Really no surprise at all yesterday that we were bouncing around and soft and choppy, just simply because we're waiting on these data points, waiting on that GDP yesterday, which really turned out to be more of a non-event than anything. I think today might be a little bit different, so be prepared. If the bulls find inspiration today, we certainly have plenty of upside opportunity if they can get some data here today to inspire them. But if the bears find opportunity, we have just a little bit more space for the bears to move in a downside move. So one of the things to make note of is we've been kind of choppy right in here in this range. We're just waiting right now for this data to see which way we're going to go in the market. So look for some volatility this morning. And then if we take a look at our T2108, percentage of stocks above the 40-day moving average, that also declined yesterday. At one point in time, it was moving up and then reversed and came back down. And you can see we've got a price range in here, and we're just kind of stuck in this range at the moment. We're just below that 50% area here in the chart. So I think anything is possible here today. If we get some good bullish data, no reason to believe that we can't quickly break through this area of resistance here, and there would be no reason to believe that if we get some bearish data that we drop this and start breaking support levels in that chart as well. T2107, percentage of stocks above the 200-day, well, it ended up flat to just a little bit lower, continuing to be range bound in here as well. It's about dead center, so anything I think is possible on the data today. We may be testing up here, we may be testing down here, we may break out up here, we may break down here. So watch that carefully here today. We're just spinning in a circle right now on T2107. Just not a whole lot of inspiration. And speaking of inspiration, when we look at the market breadth continues to decline. So as we've been getting these upside moves and big stretches to the upside, the actual breadth of the market has been continuing to decline. That may change today with this data point. We'll want to watch carefully for that. But if we happen to spike up on a bearish wave, if the bears come in, that's something the bulls don't want to see, because that could really raise that fear level in the market. We want to see, if we have a good bullish number, we want to see this breadth coming up, showing that willingness to buy and really pick that up. So watch carefully there. If we take a look at our economic calendar here for today, our economic calendar, what I've been talking about here all morning, is these data points today that we're going to be watching pretty closely. First off, we've got jobless claims today. Jobless claims are expecting that to come in at 210 by consensus. I still believe that we're probably going to see at some point in time a sudden surge in those layoff numbers here in the market. It's been remarkable how long that we have been able to sustain this, even as we've seen layoffs and the economic slowdown numbers that we're seeing here in the market. But watch that closely here. If it comes in light, meaning less, and that's what we've been seeing here lately, less people struggling with their jobs, then that's not going to be favorable for the Fed. So just kind of keep an eye on that. And then if we look at our personal incomes and outlays, well, we've got a mix of consensus information in here. Consensus is suggesting that the month over month PCE increases, that the personal consumption declines. Now, personal consumption declining, that would really be kind of opposite to what we saw yesterday in that GDP number. The GDP number showed a big surge in personal consumption. So watch that carefully here today. And of course, the headline number down here is what everyone's hoping for. Fingers crossed that we can bring that in at a 10th lower here on the year over year, even though the monthlies are going higher. So watch that carefully here today. Could, misses in here could make for some big price movements in the market and also really change rates. So just watch carefully. After that, we've got the Chicago PMI. Chicago PMI suggesting that comes in at 47.3, which is an improvement over the prior. But remember, anything below 50 means that it is a contraction in the PMI. We need to get above 50 to show that we are expanding that number. So watch that close. Pending home sales, they're looking for a significant decline in pending home sales, which probably wouldn't be a big surprise with the fact that rates are higher based on the CPI and PPI, and we'll see if that translates into the PCE today. And then we've got natural gas, and we've got a bunch of Fed speakers here today. Kansas City Fed numbers will be in there. That's been negative. It's been ugly for a long time. -9 was the last time, so we'll want to watch that. And then more Fed speak, some bond auctions in here. Fed balance sheet, which nobody's going to care about, and even some Fed speak after the bell today. Rolling into Friday, keep in mind we've got PMI, ISM, construction spending, consumer sentiment, and then a whole slew of Fed speakers out there. So just watch that closely for tomorrow and be prepared. Let's take a look at our earnings calendar here for today. Now, our earnings calendar, well, we've got quite a bit going on in here, and there's certainly some notables in here. Because there will be no blog today, I wanted to just put this up here for you so that you can take a screenshot today. That still, it just takes me so much longer to do everything when I've only got one foot. Just moving around and getting things done in the morning takes me a little bit longer, so no time to write the blog. But you'll want to note in here, we've got some nice notable reports, like Bud is in here, Autodesk is in here, we've got Best Buy in here, Dole will be reporting today, EVRI is in here, we've got quite a few FSR, Hormel will be in here, NetApp, Papa John's will be reporting today. We've got Six Flags in there. So just quite a few reports to be paying attention to here today. Watch those closely. I think this morning, any of the earnings that come out this morning will, I'm sure we'll get some price action on them, but probably will be a whole lot less focus on that until we get that core PCE number out today. So keep an eye on those. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful to preparing your trading day, please do me that favor and click that thumbs up button and leave a brief comment. The way the algorithm for YouTube works anymore, it's almost more important that people are leaving those thumbs up buttons and leaving a small comment, and even an emoji counts as engagement with the video. So thank you so much for everyone who does take the time to do that. And I, in turn, try to get back and answer all of those as well, because it is important to me, and I do truly appreciate it. So thank you much, everyone. Let's take a look at a few of these stocks that could be setting up. And remember, guys, these are not recommendations to buy or sell any security. Do your own due diligence and make sure you're following your risk tolerance rules. Make sure that you are being conscientious to your trading plan in trades. Never ever blindly follow anyone else's trade ideas. First off, let's take a look at some of the oil sector in here. We've had some interesting moves here in the oil sector, and if we take a look at the XLE ETF, still setting up in a positive move, but it's kind of hedging its bet in here. We're just trying to pick out this direction. Notice that we've broken this downtrend. We're moving in this upside trend. We're trying to hold in this pattern against this resistance in the chart. And although we had a build in stockpiles, if we happen to see OPEC announce production cuts, then look for that to push on higher. Another thing that can have a major effect on this is those bonds. If our bond yields continue to move up, if those bond yields continue to spread out, that will weaken the dollar. And as the dollar weakens, remember, if it'll just take more dollars to buy the same amount of oil, we will see oil prices move up if we get that weakening of the dollar. So watch carefully here on some of these stocks in here. ExxonMobil is in an interesting pattern, trying to break out of resistance. There's quite a few stocks trying to show some bullishness, and then there's some here that have already kind of shaken out and saying, yeah, we're not so sure, and we tried to hold on to this support up here and breaking down in here. So there's a lot of uncertainty maybe going into some of these numbers here, but I would keep an eye on it, particularly if OPEC cuts production, and if we end up seeing those bond yields go up, well, we could certainly see oil start to gain some footing. Let's take a look at CVS. Now, CVS was trying to hold right in here, trying to hold this support level, and it's finally just slipped and failed this upside trend. So now this comes off of the list for a potential long buy unless this can come back up and then prove to hold. What I would be looking for now in this chart is that possibility that we could continue to fall, rally back, find that lower high here in the chart, and start moving down in that downtrend. So watch carefully. CVS could be flipping to the other side of the coin here. Watch that close. And there are stocks starting to show that bearishness in the market. As you guys know, I have been talking about Apple here as a bearish play, and that has worked itself out here. You can see that failure at the 50-day moving average in this head and shoulders top here in Apple. This neckline on this trade, I think, is going to be really critical. If data today pushes the market lower and this fails, boy, I think Apple has a rough maybe a rough few months ahead of it. If we fail the neckline of that head and shoulders, and we can push maybe substantially lower in that chart. And I'm going to say the same thing about Google. Google failing up here, you can see that failure here at the 50-day moving average, moving down quickly toward that 200-day moving average. You guys know I've been talking about this, and here again, this is just another one of those patterns here in the chart where we break that neckline and we move on lower, and we have shoulder, head, shoulder in here, and right on down we go in Google. So watch that carefully. I don't know exactly where that one will stop, maybe down in here someplace. or somewhere around that 200-day moving average. So keep a close eye on Google, showing a little bit of pressure, a little bit of stress. So what I think we're starting to see is a little bit of deleveraging from the institutions, from these giant tech runners, and maybe a little bit of rotation into things that are, well, beat down. Let's take a look at BMY. Boy, BMY has just been an ugly chart for a long, long time. But notice what's happening here in BMY. Nice little push up here in the chart, breaking through some resistance, trying to hold that higher low. Now, I wouldn't say this is, a sure bet or anything in here, because BMY has been hated for so long. But if you take a look, this is a pattern that we call the round and bottom breakout. My partner Rick Sadler has a course on the round and bottom breakout pattern, and I did my version is on the YouTube channel of the round and bottom breakout and why it's such a productive pattern. But looking in here, we've got that potential here in BMY. I probably would have bought this yesterday had it not been for that concern of the numbers today and how we may react in the market today to those numbers. So be watching that one closely here in BMY. Now, Pfizer, I was thinking Pfizer may have had that opportunity right here. You can see we were coming up in here and it slipped all the way back down. So until Pfizer can really start picking this back up and get up into here, not interested in Pfizer just at the moment, but watch that carefully. We could start seeing some of these stocks coming up out of these bottom patterns. I get accused once in a while from folks, why do you always look at really expensive stocks? Well, it's a lot of the expensive stocks that are moving here in the market. Plug Power is another one of those that have been just pounded to the downside here. I would watch this closely. Not quite ready for prime time yet, but you can see we've got quite a few of these stocks in these bottoming patterns. Take a look at Altria, the old Mo, back above its 50-day moving average here. If we can break this big long downtrend in here, we may have some of that rotation, like I said, starting into these, coming back around to the upside to see if we can push on through. And then, of course, other places that you want to look in a rotation would be some of the stocks that are more of those consumer defensive, Constellation Brands, trying to hold after a little downtrend break, holding on to this trend. It's not a strong chart yet in any means, but it may be trying to come around and show a little bit of bullishness. Mondelez, kind of in this wedging pattern right here in the chart, holding above some support. Some of those defensive sector stocks might be the place to look. Hershey, not on that list. Hershey breaking down, just can't seem to get her going. It's as if nobody likes that chocolatey goodness there in Hershey at the moment, but watch that closely. We certainly like, however, Colgate. Colgate, very, very strong here. Breaking through resistance, nice little consolidating move up here could send us on higher here in Colgate. It's one of those things that, we find these big old boring dividend payers, and then we see this massive multi-year breakout. Boy, I'd be keeping an eye even for the longer term on Colgate. You want to watch that closely. So with that, everyone, hey, I want to wish you all a fantastic day. Thanks for being here this morning. I truly appreciate it. Wish you all of the best today as we get this data. Hopefully you're positioned to be able to protect yourself in case that starts to move to the downside. I continue to repeat this, but I think it's important to say that there is that possibility of some pretty big point moves to the downside, because you can just envision everyone holding these stocks with that uber confidence that the market can only go up. And if it starts to fall, well, everyone's going to run for the exit all at the same time. So just be prepared. So have an awesome day, and we'll see you right back here bright and early Friday morning. Wish you all the very, very best.